So today we will be talking about the manipulation phase. So first we actually finished the first stage we talked about was evaluation phase. So basically what we did earlier was basically evaluating areas where we can make a lot of money and get away with the money, which is very important. So moving forward today we'll be talking about manipulation
Mm.
phase. So the idea of manipulation phase which I came up with is certain areas where price can behave abnormal, like in the sense that you know that a price is supposed to make a particular move, but it does something else first before doing what it's supposed to do. So basically, this is areas where market makers try to trick retail traders into panicking and doing all sort of things to get them not to take a trade. So it usually happens in these premium levels that we talked about in the evaluation phase. So there's two terms that I would definitely want you to be familiar with, which as you can see my screen,
Okay.
yeah, as you can see my screen is called deviation and acceptance. So deviation is basically just where you're supposed to have an entry, it gets like violated. You understand? Maybe when you get to a resistance or a support level, you find out that price doesn't really, at first, doesn't really act as support and resistance. So there's sort of like a rapid move to take out maybe early entries in the market. So basically, looking at the chart, you see that I've tagged this side the deviation and acceptance. So basically, what I'm trying to show you here is after deviation, usually this word acceptance is a term used in knowing exactly when to enter the market. So if price moved from since we see that price moved from this level to this level, and the deviation, which is this extra move up here, that what it means, what happened here in price is price didn't respect this previous resistant level here. So this is actually area of supply here, here, and here. So what happened? Price moved further away from that area. So when this sort of thing happens, you need to be prepared in the sense that you should not rush to take trades. All you have to do is wait for acceptance. Like so what it means like physically is if price here comes back down. Let me use the arrow for this. Price comes up here, comes back down, and maybe continue going up, then we have
Mm.
gotten
Yes.
acceptance. Yes, we have gotten acceptance above this range, this price range here, this whole range here. We've getting acceptance above it, so price will definitely tend to move higher, of course. So, but if we don't get acceptance, obviously the market is going to fall back within the range, and you can see that immediately it's retraced back into the range. Price price started to crash immediately, and so you can have your take profit here, which is the mid of the range, mid of this range, or you can have your take profits here. So that's basically an easy way to catch this sort of trades. So it's important to understand
Okay.
that this is where I have my entry. So my entry is here, so I can easily have my stop loss above this area here where price has touched before. So it's important for you to understand where you have your where to place your entry and where to get out of the market. So you living here now, you can decide to use every sort of um lot size you want to use there and calculate the amount of risks you're willing to take. So it's also vice versa. It's also the same thing when we're trying to buy the market as well. So you wait for the acceptance above this level, the support level, and you wait. And when you get acceptance, you can easily long the market to maybe the mid of the range, which is 61 pips, or you can take it back higher. So if the market trends in a range, you have to treat it like a range. So what we're trying to do here is we're not actually really trading. What we're trying to do is we're trying to leverage the market. We're trying to take money out of the market and leave the market and not stay for a long period of time when you don't really need to stay in the market. Do you understand? So
Yes,
you
yes.
need to really have sharp entries. You also need to, when price approach this level, it's important for you to execute. So deviation is always important when you see price starting to move. So a lot of people like will get like anxious and start to like have place entries here, thinking that okay, maybe price is going to fall. You place your entry, let's say you place your entry here and you have your stop loss, maybe just say thinking that okay, you know that this is actually a resistant level, a supply zone where price is supposed to fall, but it's not going to fall immediately. So you have to be patient enough to realize that as if we don't get acceptance there, definitely price is going to come back down and we're still bearish in the market. So it's important for you to know where you are in the market. So obviously the sell will always be more than the buy depending on the trend of the market. So it's important for you to know where you are. Since we're still bearish, like I told you yesterday, as long as the higher low isn't broken, it can be violated, it can be mitigated. But since we didn't get acceptance above this line here, definitely price is going to keep on falling back, and it gives you a lot of confidence to place that trade because you knowing fully well where you are and and the amount of risks you can take, you'll be confident enough to enter the trade and hold it for a long period of time if you wish. So that's basically how you can place trades and be confident enough to hold them, because sometimes there's some trades you can get a little bit nervous or anxious. You start to close the trade and you check back in an hour's time, you see that the trade actually went your way. So it's not really nice. So it's important for you to be patient and wait for the market to show you where it wants to go. So moving forward, do you understand?
Yes, I understand.
Yeah, do you have any question? You can ask any questions if
Okay.
you like.
Well, what I want to ask is that these the trend currently now is in a ranging market, right?
Exactly, yes. It's an arranging market,
Okay. So
but
are we supposed
continue.
I was also expecting that when the price break down, it will continue going down or break up, then it will go up.
Exactly. That's where the word acceptance comes to play, because if we get acceptance, like everything in trading is all about structure, and if a structure is broken, that means the trend has changed. So all you have to do is follow the new
Okay.
trend. So if we get acceptance above the resistant line, which is above the entry where we believe we want to have an entry, or you have to follow where the market wants you to go. So I can show you other examples, like for instance, let's go back in time. Like let's say in this situation now, we have we have this range here.
Okay.
So this is your range right here. So as you can see, when price comes to the resistance level here, it comes down, it goes up, it comes down again. So as you can see, what happened here? It broke it came back down and went up again. So what he's trying to show is that the trend has changed. Obviously, you start to look for longs instead of shorts. So that way you get to have a sense of direction of where price is trying to reach. So you wouldn't want to be selling at this point because you will get liquidated, you get stopped out, and it's going to be frustrating. You understand? So
Okay.
if let's say for instance, now I don't know if the replay function can, or just imagine if price, for instance, like this side is not visible. Immediately price comes back down here and it doesn't keep on going down. All you have to do is stop looking for shorts. Let's say for instance you have a short here and you have your stop loss here, and you want your take profit to be here or even here. So if you get stop out in this situation, you shouldn't be try to force a sell in this situation. You just know that, oh, you've lost the trade, and all I have to do is look for longs. Well, let's
Okay.
say uh, let's say you're conservative and you're patient, and you see that price went up and it came back down, and you didn't enter. You were waiting for probably maybe if you use a break and re-entry type of strategy, maybe you want to enter when price came back up here. So it reaches here and you see that, oh, I don't think price is going to come back now because it starts to consolidate a little bit here. So you be okay, let me chill a little bit, and you see price goes up. All you have to do is when you see that price has broken this previous high, you know, oh damn, the trend has actually changed, because now what it means is this is our this is our lower low, and this is our higher high, and this is our higher low, and now we've created another higher
Okay.
high. So obviously you will not be looking to try to short the market anymore. All you have to do is maybe maybe when you see price comes back down here, you can just long the market, and previous low should be your stop loss, which is here, and you can easily just long the market from here. Put it just around here to make sure you don't risk too much, or you can have it here depending on where you want to keep it. Then you can definitely go back to the higher time frames and basically just keep place your take profit wherever you're comfortable with, which could be here or here, as long as your risk to reward ratio is exactly 1:3, or 1:4, 1:2. As long as you're making money, most important thing is making money and living with your money. So do you understand? Does that answer your question?
Okay. Yes. Yes.
Yeah. So that's
Yes. Yeah.
basic.
That answered the question.
So
Yes.
that's basically the mindset you're supposed to have every time you're in the market. So that was one of the examples. So do you have any other question? Or we can move
Yes.
forward.
No, no, I don't have any question. I understand this. I understand this one very well.
You understand the concept very well. So
Yes. Yes.
yeah, so that's cool. So when
Because
when
even the the trade I took one trade today
okay,
on a demo account. It was just something similar to this one.
okay, how did it go?
And it was on the news. I actually wait for a fake out, then I re-enter the trade again.
Okay, okay, brilliant. That's the
Just as the
that's deviation.
deviation.
Yeah.
Yes.
Okay.
Then I re-enter the trade again.
Okay, that's wonderful. That's cool. So you're liking the strategy, yeah? The strategy is at
Yes,
least
yes.
it's a little bit helpful because it lets you not to risk a lot in the market, and it's really nice depending on the type of trader you are. If you're not too aggressive, a lot of aggressive guys definitely, when they see this breakout, maybe because of the news, like sometimes, like if you understand structure and you master the strategy very well, you won't need to be trading. News will actually help you to be able to have faster entries, in the sense that, for instance, due to news, price can easily just push from here
Yes.
to here faster compared to if it's on a regular day. So it really helps. So I don't really advise on trying to predict the news and to see, maybe try to maybe follow where you think the market is going to go, if maybe CPI or what's it called, non-farmers payroll, NF.
FMOC.
Yes, yeah, all those things. So you don't really have to train the news because you already know how the market flows. So if you master how
Yeah.
market flows with Euro USD, GBP USD, or any other pair that you feel you can master very well, all you have to do is just spend a lot of time with the pair, make sure you understand it fully. So that really helps in boosting your confidence. Confidence is important in trading. Like I told you before when we started our classes, psychology is everything in trading. So your mindset is very important. Anyone can learn technical analysis. So psychology is very important, and these techniques help you to help in boosting confidence. You understand? So when you have confidence, it lets you hold trades that you're supposed to hold
Yes.
and close the one you're supposed to close. Do you understand?
Yes. Yes. I understand.
Well, that's good. So have you picked pairs that you like?
I trade GBP more.
Okay, okay, that's cool. I trade it a lot too. I like it very well. So yeah,
Okay.
that would
So
be
is
all
now
for
GBP okay?
that would be all for today. But if you have any question, you can ask. Then we can see what we can do more. You can ask
Okay.
any question. You
The
like
thing is
even
that
even if it's not relating to what we discussed today, just you can ask any question.
okay. The thing is that I have small knowledge on the market. Just the main thing is developing a strategy. Since I
Okay.
still use indicators, is it advisable to keep on using indicator or probably try and develop a new one?
Um. Well, indicators are nice and really nice, especially depending on the one that you're using. iPhone, I don't actually use indicators because like I'm
Okay,
familiar with how price usually move in certain areas. So
okay,
I feel like if indicators are good for you, you should keep on using them. Like if like they are very, very effective, if I might say, like
okay,
they work very well, especially MACD. I like MACD and the RSI. So it really helps to know where volume is. So it's basically just shows you where volatility might happen. And in trading, we all want to have that sharpness, that fast move, so that you can get out of the market on time to like sort of like run away with your money. So yeah, indicators are nice if you know how to use them. I know a lot of people who use indicators and they work really well for them. So I don't think you need to change a lot. Just understand the concept that I'm showing you. Make sure you implement them in your trade. Be patient, and you can use indicators, of course. You can just add them and use them, but I don't really like to use them.
okay.
Yeah. So yeah, you don't need to change much.
Well, the okay. And the indicator I'm using definitely is actually okay, but just the issue is that
You can't you
the
can't
losing streak is much.
yeah, you can't really rely on the if you're relying on the indicator, definitely your losing will definitely be more than your wins. Your losses will be more than your wins. So you just really have to understand structure and not gamble away your funds. Once you understand structure, you're patient and you're smart about your entry, and you're you're very, very confident about your entries and all, and how you maintain the trades when you're in it, you're going to make money. Like definitely when you trade, you take out your money, and you continue trading. And it's important to know, like, I think the smartest traders are the ones that know when not to trade. That's why I feel that's just my opinion, really. So if you know when not to trade, definitely it will reduce your losses as well. So in situations like, which I just explained earlier, like in situations like this, maybe you feel price is going to sell and it doesn't sell, what are you going to do? You're going to keep on losing money because you don't know where you are in the market. Now, if you understand Wyckoff concept, you see that markets actually created some Wyckoff here. I think here
Okay.
should be preliminary supply, I think, then active, other stuff. So it's really complex, but I think we shouldn't get into it right now. But this is, I think, Wyckoff. So immediately price gets to the LSP. This side should be LSP. Price obviously will definitely start to fall here. When you get the other retracement, it's
Okay.
definitely it's definitely it's showing you that it wants to sell, basically, because we have in Wyckoff we have accumulation and distribution. So this is basically an example of distribution Wyckoff. So as you can see, the UTAD is here, UT is here. So the terms are still there, but I don't really want to stress you with that one now. But we'll get into it a little bit further in our classes. But
Okay.
when, as you can see, when this move happened, the structure is already broken.
Okay.
So when you see this move here, the structure is already broken. All you have to do is wait for price to come back up and maybe create a sense of it wants to drop, and you can have your entry here just at the break of the candle. You can have your your entry there, stop loss here, or even here if you want. So as you can see, the stop losses are all small because you're entering
Yes.
at really really nice areas. So as you can see, price came back down. You can actually take this trade as well if you're a scalper. You can enter here immediately, price gets here and you see that there's sort of a demand level here. You can get out of the trade and price obviously will move up if you over leverage in the trade and you don't close. When price gets back here and you're thinking, oh, let me add more positions, and you add more and more here, it's going to liquidate your account. So you just have to be patient. So when I'm here, what I'll do is definitely I'm not going to have any entries. So like just like our lesson, I said you should only sell when it's buying, and you should only buy when it's
Yes.
selling. Yeah. So as the market is approaching here, I'll be patient, hoping to see maybe if it flips this support line here. So if it doesn't, I'll wait. And if price comes here and fail to create another high, obviously I know that the market is going to sell. All I have to do is wait for market to come here, and I can, since it created this high, I can have my stop loss just around this area here, or I can have it above, and it's enough. It's the risk is actually okay compared to what you're going to make. So it's still, anywhere you put your stop loss, you're going to get 1 to ratio 3, which is important. So for instance, now I decided to take this trade. Obviously the market is going to drop really fast, and depending on your lot size, you're going to make a lot of money, and it will be like magic. Like, the feeling is really nice. So obviously, you want to be taking sort of trades because the trend has already changed
Yes.
because of this job here. So yeah, and it came back up, came back down. So obviously, as you can see, the market continues to follow the trend. It kept on creating lower lows, lower lows, lower lows, and this always happen in Euro USD. Price will always definitely come back up and try to create a fake out to make you feel like it's not going to sell anymore. You just have to be patient. And if actually this high this previous higher low. If it breaks, then definitely you know that you're going to keep on buying the market. So it's really about it's really about knowing where you are, patience and all. So as price comes here and it comes up here, it created the deviation. Price, I think price went up above here, as you can see. As you can see, it went slightly above it. So you just have to wait. Once you get a break of structure, let me delete this. Once you get a break of structure around this area here, as you can see, this place is actually has a lot of support there because price reacted to here at this point, and at this point. There's a consolidation, so you know that there's actually support level here. So when price breaks support, obviously, if depending on if there's volatility, you can get sort of this kind of moves, which is really sharp and nice. This sharp and nice. So that's why I like to have my entry just slightly below the support line, because when it drops, it's like you're dropping a chair from a building, so it's definitely going to fall faster. So I like sells. I like to sell the market more than I like to buy the market. So if I see my favorite pair is selling, I'm always happy because I like to sell because the money is really fast to enter. So all you have to do is take the trade. You can actually take the trade from me. If you're watching the market and you see that price is not going to break this level, you can take your entry and place your stop loss. Imagine the stop loss is like 17 pips, so you can place your stop loss anywhere, and it's not going to get hit if you take this trade. If you take this trade and watch, you can have your take profit here, 54 pips. That is 1 to 3, or you can have it here, but you know that it's bearish. So definitely you can decide to place your take profits wherever you choose. So that's basically just how you build your confidence, your confluences when you want to take your trades. So is that clear?
Yes, yes.
Okay. Do you have any other questions?
No, no. I don't have any question. I'll just go and try and practice
Yeah,
this
all you have
deviation
to
and
do
step
is
out.
yes, all you have to do is back test, always test it. Like G always also move in this sort of way. So all you have to do is just go back in time and practice. Keep on practicing. Since you're still on your demo account, you can be practicing
Okay.
till your mind is able to make decisions for you. Like your subconscious mind is able to take decisions for you without you having to really think about it. And that's what a lot of time will do for you in the market. So I feel like a lot of traders don't really emphasize on what really psychology is, and it's important for you to be able to make decisions without having to think about them too much, because you've already trained your mind, your subconscious mind, on what to do when you see this sort of thing happens. So it's you're going to have to master it with time. But since it will take you a lot of time if you are on your own. But with my guidance, you'll be able to learn a lot from the market faster than you're supposed to, and be able to take advantage of it and start making money from the market. So it's important for you to be able to master these things so that you can be taking trades on autopilot. I like to use that word autopilot. So yeah, so that's basically what I'm trying to show you. So tomorrow we're going to talk about objective phase. So objective phase will consist of two criteria that I also came up with. It's called liquidity pool and order block jump, OBJ. So I'm going to explain to you these two terms. I came up with the names. I know order block jump is funny, but I came up with the names. So I will be describing why I gave it that name and how it works in the market. So We'll talk about that tomorrow. So if you don't have any other question, that will be all for today.
Okay, okay,
Yeah.
okay. Thanks. So
Okay.
let me go and try and practice this one.
All right. All right. All
All
right.
right, thank you.
Bless up, Victor.